Dampfmaschine.
Warm welcome also from the German or Dutch side. Tim said I should really energize a little bit and take something of the stuff Claudia has been taking. I'm Dutch, I just came from the coffee shop and the team as well, so we are well prepared. Let's get started on Germany, and I think the biggest challenge is to do this in 45 minutes, because I hope for a lot of questions from your side. I'm on the same stage I was in 2012, and I'm first going to give you our key messages for this presentation. Very briefly, leading European telco for Germany specifically, this means that we want to be amongst, it says here, and of course our challenge is to be the first integrated incumbent to really return to revenue stabilization and EBITDA growth. The differentiation will come via superior networks. I think that's by now clear. We have talked a lot about networks already. Best customer experience, which we have also shown you last evening, and integrated best products. That's a key part of my presentation for today, and I will show you the first detailed results of Magenta 1. We want to be the #1 choice in mobile, in fixed, in TV, and in converged products, and we will do so in an environment which is typically e-company driven. The journey, as you've seen yesterday with the presentations we gave, has started, and the expectations behind e-company and self-service as a way to improve customer service, but also have an efficient operation and save cost, will be a key driver for our business towards 2018. Strong execution, I think that is what you can rely on from the German team. We have delivered in the past on our mobile network, mobile market share, sorry. We are on track with the network rollout and the IP migration, and we have a healthy 40% margin. Strong financial performance is also ahead. Looking back on the period from 2012 until 2014, I was on the same stage in December 2012. We made some quite, I think, tough promises, and I saw some doubts on faces of the people that were here as well. I'm proud at the moment to say we delivered. We delivered not to 100%, and to the question marks that are on the chart, I will give some comments. But if I look at the overall result, I'm a very pleased man. I'm proud of the team. We delivered on mobile service revenue market share with 36.3% for the full year. Of course, a little positive effect from the consolidation of Telefónica and E+. We have seen 8 quarters of market outperformance. What doesn't please me, of course, is the absolute value of the revenue in the mobile market. On broadband, the market share is at 41.6%. That is access lines, that is not revenue, and that is totally reflecting the value strategy we have followed here. We have focused on retention and not on net adds. But nevertheless, we are of course not satisfied with losing customer market share in this period. In TV, it's very strong growth, almost 500,000 new customers in a 2-year period. If I might remind you, Cable Deutschland and Unity Media both lost respectively -1.3% and -2%. Vodafone has stopped the active marketing of their TV product, and Telefónica fully withdraw out of this market. On quality, we delivered. Customer loyalty index went up. We are now at 60 points, which is a 7% increase. Numerous initiatives, very structurally in all areas of our business, in the product area and customer service, and in our technical service. And the good news is we are fully online to deliver for 2015 as well. On the revenue, honestly, we missed our goal of revenue stabilization by 2014 due to very strong price fights in the mobile market over that period. And also in the broadband, I think we have underestimated the effect of the announcement I made here in 2012, when we said we go for massive FTTC rollout and vectoring, and our competitors, also preparing for the IPOs, of course, have really pushed in the market, and competition has been very strong during that period. Reflected in the connected home revenue, of course, as well. Proud to conclude this overview. I'm on the EBITDA margin of 40%, especially if you consider that we are in an environment with, where our competitors are very mobile-centric and have much more lean operations than we have. So in that, I'm a happy man for the period behind us, and now let's look to the future. Future comes with trends, with market trends, and don't panic, I'm not going to repeat all the trends Tim has outlined yesterday, but there's one, or basically two trends I want to touch upon. The first one is about convergence, driven from a customer point of view. If we look at convergence, there's a few developments in the market which are strongly driving convergence. A big supply of new devices. We're not talking only about mobile handsets, we are about tablets, we are integrated TV devices. That comes with new technologies, much higher speed, especially in the mobile field, which drive new user cases. Nobody would have thought of watching TV on a mobile handset or a tablet 4 or 5 years ago. But LTE has made it possible and has led to new user cases for our customers. The same is true for for the social networks. You see some numbers here. If we only see how much the usage has grown in Germany over the past 2 years, 25 million more WhatsApp users. That is an average of 1 million new customers per month. And bringing that together has really led to an explosion of data traffic, both on the mobile networks and on the fixed line networks. And I think especially the combination, the fact that the devices are used with a different content and customers don't even worry about what device they are using and on which network they are using it, is also shown by the increase in Wi-Fi traffic, which is the combination of fixed and mobile, but for the consumer, I think in most cases, really used as a mobile solution. That makes us predict that there will be growth in the market. In the broadband market, we see a 2% CAGR until 2018. In revenue on the mobile one, we see basically a stable development despite the significant regulatory headwinds of almost 0.4 billion, as we estimate them to be. This customer trend is, of course, also seen by the industry itself. And I'm happy to say that we saw that trend coming already early 2000. We prepared to go for one company, and we started that project with an official start in 2010, laying together mobile and fixed line. We'd always said that mobile alone, in the end of the day, will not be sufficient to work with those massive amounts of data, and we need fixed line support. We had the big advantage of having T-Home and T-Mobile, at least with some flavor of Magenta Telecom. As you can see, our competitors are far behind. And I can tell you this process, we are on the way now for 5 years. It's almost fully completed. It's a painful process. It's taken a lot of time. It's a lot of energy, and it's a lot of money. But I can promise you, I can tell you, I'm very glad we took the decision in 2009, started in 2010, and we are now really one integrated company. You see that pays out as well, which we try to explain in the graph on the right side, on the consumer trust in an integrated player. Consumers want integrated products, and those who want it, we have some official numbers from a study. 37% of the customers say, I would take the incumbent telecom for such a product. Cable comes only at 9% as a trustworthy partner for an integrated product, and DSL providers only at 6%. So we are very well positioned for this trend, which is taking place in the market from a consumer point of view and an industry point of view. Going to our strategy for 2015-28, I first want to put it in the perspective of the overall Deutsche Telekom strategy, and you won't be surprised, we have ordered it in building blocks which also fit to the German strategy. On integrated IP networks, we go for the integrated network strategy, we go for the maximum quality and the best quality in the market, and of course IP and process transformation. We've heard a lot about it. The IP and process transformation, I cannot emphasize it enough, is the basis for the modern company we're going to deliver on the way to 2018, and that will change our lives and it will change the lives of our consumers. Best customer experience, of course with much more elements than here, but strongly driven by Magenta 1 as the integrated product, TV, which you've seen yesterday as well, and the e-company, which is a much more modern usage of the product, but also service and sales opportunities for us. Win with partners, lot said already during these 2 days. I will give you some perspective of where we stand in Germany and how we're going to make money with it, and lead in business, how do we continue the very positive growth in the business segment. We'll transform the company, and we'll transform in a way that we have stable revenues and growing EBITDA to also fund these transformations ourselves. It's a huge operation, it's a very expensive operation, as you can imagine, and we as management have taken the challenge to fund that from within. Now let's look in a little bit more detail what these blocks really mean. And to help you on where we are in the strategy, we have put in the right upper corner the part of the strategy where I am at the moment. I'll start with networks and do it rather quickly because a lot has been said about networks. Our strategy is to have the highest speed, to have the highest coverage, and to have the highest capacity. We are a leader in networks, both in mobile and in fixed. I'll show you that later, and we want to stay there. In mobile, Bruno and his team have basically won all tests, and with a big distance. And I think it's sometimes easy to win a test. It is about the distance which you have to your competitors. It's now for the 4th consecutive years that the 2 most important tests in Germany have been won by us. We have, meanwhile, a coverage, as you can see there, of 80% on LTE, with higher speed than our competition. Behind that is a very high percentage of our sites that are connected with fiber, an advantage our competitors don't have. 80% of the cells are connected by fiber. On fixed, we have the largest national household coverage with 44%, and in vectoring with a download speed of up to 100 megabit. And I want to stress again here, the upload speed, which we don't talk about that much yet, goes up to 40 megabit on vectoring. Cable doesn't come further than 10 megabit. And please watch the development in the future. The press has now picked it up, focus groups have user groups have picked it up. That is a key driver for customer satisfaction with the cloud services, video, music. Also, customers are really now noticing the benefit of having a higher upload speed. And no one can come as close as our 40 megabit. On hybrid, we bring the best of both worlds together. You've seen that yesterday. We launched a product with a new hybrid router in Q4 last year. Very good customer reaction. We will go for nationwide sales as of March. Together, that brings an upload speed of 90 megabit, up to 90 megabit, and a download speed of up to 200 megabit. How do we evolve? You see the summary of where we are once more on the left. Bruno and his team, you heard already yesterday, took the challenge from Thomas Dannefeld to work within the same CapEx envelope we have been discussing on 2012 to deliver even more on our network. And what is our ambition until 2018? We will increase our coverage from 80 to 95% with a maximum speed of 300 megabit. Now you might recall that Vodafone and Telefonica have both announced 90% by 2016. You can say only 5%. Remember, it's POP coverage. And these 5% POP coverage are going to be achieved in relatively rural areas with a low density of population, which means the 5% of population is a much bigger area coverage, which we will have with LTE. On fiber, on our fiber network, we will increase our coverage to about 80%, pending also regulatory adjustments, with a guaranteed, that's important, minimum speed of 50 megabit. But up to, as you can see in the next bullet point, with the introduction of super vectoring, a speed of 250 megabit in download. If you combine those two again, you see that we get to a download speed in the hybrid solution with a maximum of 550 megabit, specifically, of course, focused at the cable area, where we have the top quality product, where we have a competitive product, and where we have a super service for our customers. That is the network rollout. One part of the network rollout is also the transformation to IP. A lot has been said about IP and the advantages, so a very short and crisp summary. We are now at 25% of our lines including wholesale customers, which have been converted to IP, a total of 5.8 million users, with a speed, and try to imagine, we do between 60 and 70,000 transformations to IP every week. Not per month, but every week. A huge operation, but absolutely necessary and absolutely right, because the IP gets us away from the old legacy, which is making our life difficult, is our customers' life making difficult in the fixed line network. We will complete the IP migration by the end of 2018, and we will do so for the customers to have better speed, higher quality, easier to use products, easy self-provision, like you have seen yesterday, some examples. This is a key step to the modern company we are building. But there's also benefits for ourselves, that is very clear. Also, we will have higher speed, higher quality. It will be much easier to develop products for the IP networks. We will have less problems if there is a disturbance somewhere. We can, most of the time, remotely help our customers, and we will save significant costs, not only in developing, but also in the maintenance of the networks. Good. I said a few times, a totally new company. And what does it mean? Totally new is kind of an aspiration, is a kind of a journey we have taken you on yesterday a little bit, is a company that I think doesn't find any copy, at least in the German market, but I think not even in the European market. It starts with the network rollout, the best quality network with the highest capacity, highest speed, and the highest coverage, both on mobile and on fixed. On top comes that IP layer, which is vital to make the products easier, to make the processes easier, to make the IT easier and cheaper and faster time to market. But then it only starts for the customer. And what we see is, as it says here, a surprising company with innovative products. It is a company that goes for top quality products that are not always world shocking maybe, but as you have seen, I think yesterday in that atmosphere of design and of branding, we want to bring forward the German organization. World-class design. We had a lot of prizes for our design over the past years. World-class branding. Tim showed yesterday the trust in the brand, told you the value of the brand, ranking number 2 now in Germany behind BMW. That is something that doesn't only have a value for us, but also for our customers. And maybe one thing about surprising. Tim asked me to put one spot in, because the American colleagues will have a lot of music and sound as well, so he said, let's take one. Our Magenta 1 product in Germany is supported by the family Heinz. It's a family that uses the features of the product, and to make something surprising, innovative, we have the first commercial that was shot in the morning on Rosenmontag, that's the Monday of Carnival in Cologne. And Carnival in Cologne is not just a thing, it is now, brought to the UNESCO World Heritage because it's such a special event. The family Heinz is on the Carnival in the morning, and the film was on air the evening at 6 o'clock. New, never seen in Germany, so I would say, video, please.
Heute ist Weiberfastnacht und Papa, Onkel Pusch und ich sind in Köln.
Hallo Clara, unsere Karnevalsexplosion startet jetzt.
Yes! Yeah! Hammerfigur! Sag mal, kann ich deine Nummer haben?
Und dann ist Onkel Pusch verloren gegangen.
Polka, 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 vom Ring bis an die Wolga.
War er dann auch. Keine Ahnung, wie er das wieder geschafft hat.
Zu Hause und mobil werden eins. Magenta 1.
Thank you. I don't think that needs any translation, but it's just different, it's surprising, and we think it's funny. At least the audience loves it. Good. Coming back to, I talked about products. We spoke a lot about e-company yesterday as well. we see a company that will be comparable to airlines, to banking. If you think how traveling was 20 years ago with paper tickets, standing in queue to get a seat, to have your luggage in, to change, to get your miles afterwards redeemed, that is a journey we have embarked on. We showed you some apps yesterday, of which we have alone in Germany a total of 68, to make our customers' life easier, to make our life easier, and to get to one seamless usage experience, information experience of everything we have to offer. It should be easy to get the information about the products. It should be easy to buy them, independent where you are. Is it in a call center? Is it in a shop? Is it online? Would it be via your TV program you're watching at that moment? All the screens in which you can have an interaction, all the contacts you can have. You are with Telekom Deutschland. You have the top quality in service and in products. As said, compare it to airline companies, and I think you have a view of where we want to go. We do this, of course, to get highest customer satisfaction, which in the end of the day will also justify our price premium, because we will remain to be a premium operator in the market. That is our DNA, that is what we are good at, that is the quality we have and we want to stick to. Good, how do we differentiate? The word differentiation came a lot yesterday as well, and let me tell you how we differentiate in mobile, in fixed, in TV. On the mobile, it's of course at first our superior network. The network is the key driver for customer satisfaction. I've shown you where we are and how we are going to keep that position. On top of that, we see that the market is basically segmented in three parts. First is the top segment, the premium segment. Then we have the middle segment under €30, which we call the smart shopper segment. And we have the discount segment. We serve the premium segment with our Telekom Magenta brand. It's the premium that focuses on best speed, best quality of handset portfolio, for example. Tablets we will offer there, and surprising, innovative extras like, for example, Spotify. For the smartphone, smart shopper segment, it's not that we don't like that part of our family. It's extremely important. Kongstar, our brand in that segment, is meanwhile serving more than 1 million contract customers and has been showing double-digit growth over the past years. And I think that success story of the dual brand strategy is also visible in our contract customer base, which has been growing with a CAGR of has been going with a strong CAGR, and we predict to grow with a CAGR of 3% over the coming years. We will increase also within that base the customer base that is using double play, so voice and data by 14% point to over 13 million. And because of that improvement in the mix, we will see, we think, or we are sure that we can outgrow market development, although maybe not as strong as you would expect, with a CAGR of 1% until 2018, including then the effect of EU roaming, which we expect to be about 130 million for Telekom Deutschland. The third part, discount segment, we serve via our wholesale partners. The differentiation in broadband also comes from having the best network and the network rollout initiatives I've told you. And because I know the questions will come, yes, we have had 2 difficult years in broadband. We saw losses in 2013, we saw a black zero in 2014, and yet we are confident that we will see the growth now in 2015 and years to follow. What will we do? We will leverage our customer base and upsell them to fiber. That is on average a €5 ARPU increase, and I think with the rollout plans of up to 80% fiber in 2018, you can see the big perspective we have there. Magenta 1 is a very important driver for our fixed basis, and I will show you later as well. We will upsell customers from double play to triple play, with on average 20% more ARPA, from 31 to 37 euro. And of course, once consumers are locked into our TV product, we see lower churn, higher customer satisfaction. There are additional packages like HD, which are have a very high acceptance with our customer. For those packages, also a €5 ARPU uplift. And the success of Entertain, because I get asked a lot, I want to give you an example of those areas where we roll out VDSL or vectoring. We see a 50% take rate of Entertain. So the product is very well accepted. As I showed you in the beginning, more than 500,000 new customers over the past 2 years, with a trend going up. The rollout on VDSL and vectoring itself is also pushing the Entertain product for us. If I look at broadband development, we started in April with a bigger rollout of VDSL. If I look in the areas where we rolled out VDSL, we see at the moment that we are able to keep our broadband market share. If I compare that to the areas where we didn't roll out VDSL yet, I still see the decline in market share. The difference is 0.9% point. And I think that's a huge difference, which really shows that our strategy works. Now, you can say it's only flat. We would expect a growth. Remember that the total market is growing by roughly 3.4%. So in those areas where we rolled out VDSL, we see a growth of 3.4% in line with market. We will leverage our innovations. We talked a lot about super vectoring and our hybrid router, where we see in the initial phase, we have to be careful, it's only initial, a win back of roughly 25% of the customers who decide for this product. Everything supported by very strong regional marketing. We have a very good regional presence, our own organization, but also our partner organization, and it makes this a very efficient operation as well. We don't have to go for a nationwide offers if we only have an issue or only have a network rollout in regional areas. As said, I trust a lot upon on the measures we have taken here. I think we have absolutely the right trend in broadband numbers at the moment. And with these measures, we expect to significantly increase the number of fiber retail customers, and we see a CAGR of 2% until 2018, and a growth in triple play revenues by 50%, totaling 1/3 of our revenues on triple play in 2018 then. The third part of our customer promise is TV. I think at the moment we have a very good product, well accepted by our customers. I repeat again the growth we have seen. We present our Entertain product as kind of an open platform. Everybody who is searching for any content on TV can find it with us. Be it Sky, be it Netflix, be it Maxdome. You just have to go to Entertain, and that is where you find everything. The highest number of HD channels with more than 200, time shift, full interactivity. I mean, there's a lot of features already now in the product. But we are facing very strong competition from cable and from OTT players. OTT players are coming to the German market as well. Still some hurdles to take, because most of the programs, basically I would say 99%, are aired with translation into the German language, which is of course a hurdle for OTT players, but it's just a matter of time that also OTT will really be a competitor to us. Now, how do we drive sustainable growth in the TV area? Comes from 3 sources, but more importantly, we hold our prices steady. We are not going to play the price promotion game and destroy all the value in the TV market. So price is stable. On top of that, 3 sources. The first one is the new TV product. You've seen it yesterday. New features, new user interface, much more telecom as it was before. Instant restart, I think, will be a very important feature which consumers are really begging us to introduce. And when we have the opportunity, best-in-class content as well. Exclusive if it's affordable, with partners if it's too expensive. I think we have very good experience now with Sky, where that model really worked on the Bundesliga rights, and we are not going to make the mistake that we buy the exclusive content too expensive and in the end of the day don't make money with it. So yes, content, but always in a rational way. In the end of the day, we remain Germans and we spend our money very efficiently. Sorry, I was too fast. Second part of pushing TV in the German market is resale. We started this quarter with 1&1 on a resale partnership where they sell a white label product on TV. And important as well, although it's only a small part here on this sheet, but please keep it in mind, we are attacking cable in the housing associations. We have 280,000 households now under contract to deliver TV signal. Criticasters will say that is not a very high number if you look into the German market. We plan to go to 780,000 by 2018, so there's still a lot to do. But it's extremely important that we tap in this profit pool of cable. Also, that is a point I want to repeat. Everybody who has been with me in individual interviews knows that by tapping into this profit pool of cable, we take a lot of profit away from the TV business, which they cannot use to cross-subsidize their broadband product. And that works at the moment. We are in 80 to 90% of the contract discussions with housing associations. We are winning contracts. We're not winning all contracts. We don't have to win all contracts, but at least we are in there, and we take a lot of the profit away. For us, it's net revenue, it's net profit. As a result, I expect to land around 5 million TV customers in 2018. Now, I talked about partners. That is also about wholesale. Thomas said yesterday, for us it's very important to have high utilization of the network, and that's why we set ourselves a high 35% target for network utilization by 2018 on our fiber infrastructure, because high utilization allows us to invest for the future as well. That means for 2018, 12 million active fiber users. That is retail and wholesale, and to fill the network, we use the contingent model. That model supports risk sharing with our partners. They do an upfront payment. It brings better quality for them, able to compete with cable in the areas where they sell our products, because otherwise they would be stuck on the DSL on the copper speed of maximum 16 megabit. And for us, two big advantages. First of all, we see rather stable pricing for the next 5 to 10 years, because they are, of course, locked in that price model as well, if they want to make money. And secondly, these customers go from a roughly 10 euro ARPU on ULL to almost 20 euro on our fiber infrastructure. We expect by 2018, 40% of our user base to be on fiber wholesale, and that mix improvements brings us to stable wholesale revenues, despite, of course, the losses we will have in ULL, because consumers are migrated to cable. Magenta 1, you've seen the video. We've spoken a lot about it. Tim gave you the most important data already yesterday. An important trend in the market, consumers, 2/3 of the consumers want bundled offers from us, and they want it from incumbents. And I think the introduction of an integrated product is only the logical step of the integrated company we started in 2010. Integrated sales processes, one integrated brand, and now we have one integrated product. The challenge was, what do we do? Do we reduce prices, as we have seen in many countries, especially countries that had a churn problem, either on fixed or on mobile? We didn't have neither, to be very precise, and we said no, we should use it as an opportunity to bring more value to our customers. We addressed two very specific customer needs. No worries about how they use their mobile and their fixed line. And we introduced a flat for calls from the fixed line to mobile as well. Secondly, people always complaining about speed. They want more and more and more. It's like on the German Autobahn. And then we said we give you maximum serve speed on LTE once you have a Magenta 1 contract with us. Our clear goal is this category, this product, will be a huge success. We are going to own this category, because nobody is as trustworthy in having the best mobile and best fixed line network as we are. We wanted to be the first ones. We are the first ones. We know, of course, competition is copying us. I think it's honestly a very bad and cheap copy, and it's not that easy to do. Even for us, it's a lot of work behind the screens. Our target, 3 million customers, SIM card customers, by the end of 2018. On household, it is 2 million households. Now, where do we get these customers? On the right, you see where the customers are in the market. In the upselling fencing part, where customers very often passively, they don't even know it or hardly recognize that they have it, a mobile and a fixed contract with us already, we have roughly 4.1 million customers. In the new customer block are 12 million customers, and in the light gray boxes, it's either mobile or fixed. We have in total 11 million customers that use only fixed, and we have 4.3 million customers that use, 3.4 million customers that only use mobile. Now, our customers come from all blocks. That is the good news. Of course, it's easiest to get customers from the magenta block because they will first go for the price advantage. And it is also a little bit the fear we had, of course. We did a lot of consumer testing, but in the end of the day, the market will decide. Now, what do we see after 4 months? Extremely successful. We had aimed for 350,000 customers by the end of the year. We have 506,000 customers. And the trend we see is still fantastic. Triple play share of more than 50%. We had aimed for 1.5 SIM per household. We are over 2, as you can quickly calculate. It's boosting customer satisfaction. We had 60 points for our total telecom business, 75 for this product. And, of course, most important, Tim said it yesterday already, an increase of revenues of about 4 euro per household. And the logic says those customers that optimize themselves directly are in the beginning, so the number can only get better. No risk, I would say, no fear, at least for backbook pricing. I think we have seen now the first 4-5 months with Magenta 1, and it's a major success. Our products and our networks will be supported, and I'm almost going to skip this chart with the e-services. I'm not going to repeat it for the sake of time. We have a lot of digital touch points, which will help us to increase online sales as well. 10% where we are today is basically a relatively low number, but the German market is relatively slow in adapting, let's say, these kind of developments. We have set ourselves a 70%, 7% point increase until 2018. And I think if you compare that to where we are now, that is a major step forward in only 4 years' time, basically. We reduce service contacts by a lot of auto installation, self-provisioning of our equipment, but also because we will have much more opportunity to remotely support our customers. In the end of the day, as said, it's always a combination of customer satisfaction, but we are happy as well if we can reduce the cost. Customer satisfaction behind the product initiatives, behind the network, and behind this e-company path, we estimate at 4% point from 60 where we are today. Some will say, with all the initiatives you have, you could be a little bit more ambitious here. Don't forget that we are in the middle of a huge transition as well. We build our networks to IP. We built our new TV platform, and taking that into account, we have said, let's be a little bit modest on that one as well. We rather over-deliver than over-promise. But a constant improvement of customer satisfaction is high on our agenda. So much about customer here. Let me go to partnering. We've seen a lot of names, of brands, of partners yesterday as well. We are very clearly embracing the partner strategy in Germany. That was different 2 or 3 years ago. We didn't have so many partners, at least not the ones we would name. We saw them rather as competitors and as threatening. Partnering is now really a pillar of our strategy. It enriches our portfolio, it gives new user cases, and in the end of the day, I think that's important as well. It gives revenue and it gives a margin. You have seen smart home yesterday. I won't go in any more details. Other examples are Spotify, which we are selling since 2012. Kind of a rocky rumble start. We are now at almost 200,000 users, and we have doubled our revenue on Spotify last year. And I see those trends now really taking off. In total, we expect 300 million of revenue by partnering initiatives for 2018, and as you can see, 6 million active users. Business. Before really going into what are we going to do on business for the future, I want to be a little bit proud of what we have achieved so far or where we stand now. We are clearly the #1 in the business market. In mobile, we have a SIM card market share of 51%. We have won 3% point over the last 2 years, and our colleagues from Düsseldorf, who are always bringing their successes to the market, lost 1% point in that same period and are at 38% SIM card market share. On broadband, we're even further away with 64%. We have successfully defended our strong position in broadband in the fixed line market over the past 2 years. We do so a lot behind superior ICT competences on top of the basic telephone product we are selling, of course. We should not forget that those are our roots, but we see a lot of additional volume and activity coming from ICT competences. We are the only one that can basically offer everything from the beginning to the end, but really the end-to-end responsibility, not in specific areas of the country, but nationwide. It all comes from one hand with one responsibility and, very important for Germany, with the highest safety standards. Security made in Germany is meanwhile heard. It's linked to Deutsche Telekom, and as you saw yesterday on the chart, the 50% that trusts Deutsche Telekom with their data, with their cloud solutions, is due to the many initiatives we have taken in Germany, also together with T-Systems, to secure this. The mid-market initiative was told by Tim yesterday already. We introduced 19 products. We will increase by another 11 to over 30 products in 2018. We started with partnering very carefully with 38 partners. We will go to over 500 by 2018. Be very close to the market. That is important with specifically the SME, which are, we should not forget, 3.5 million companies in Germany. SME is big. 3.5 million companies, and amongst that are also well-known international brands. As a result, we will bring 0.4 billion additional revenue to the party in 2018. A bit more detail on the products. On IT cloud solutions, we see almost a doubling of the number of digitalized working places per year, which is a huge CAGR. I would like to see that in more of my KPIs. With all the products we are selling in that area, you can see that we expect growth there of 21%, which is very far above market average of 4.8%. Machine to machine, in the middle of our attention at the moment, a new platform, new feature, new business models, a lot of partnering happening there as well. 29% CAGR we expect on a SIM level, and the Deutschlandland, which is basically the integrated and the converted Magenta 1 solution for the business segment. We'll officially launch that very soon as well, converting customers to IP and with all the advantages they have on IP. Makes us believe that we will grow in all parts of our business segment above market average with a total CAGR of 2% until 2018. This chart summarizes everything we're doing, and of course, most of the items are not on the chart, only the important ones. Please read that on your flight back. I think all has been said here. Let's look what it means in financials. Revenue decline of 0.8% in 2014 was a slight improvement against prior year, but it was, of course, below the forecasted expectations of stable revenue, which we gave here at the Capital Markets Day in 2012. We'll see a slight decline in 2015, And then from 2016 on, we aim to stabilize the revenues despite the EU roaming impact of which is between 100 and 130 million. In the following years, we expect the growth to come from, and if I say following years, that's as of today, basically increased mobile service revenues, better fixed network trends. I've told you the trends over the years. 2013 was still negative in broadband, 14 was 0, and we are seeing the growth now, and growing IT revenues in the business segment with the mid-market initiatives I've just shown you. We also need the support from cost reduction, something we have been doing for years, is also part of our DNA, and I would almost say we have invented it for this industry. If we look at OPEX, we see an overall reduction with a CAGR of 1%. You see that in the middle from 2014 to 2018. Some of you might have expected a higher decrease in OPEX, I think. I see some disappointment in the room, but don't forget that we have massive transformation where we are in the middle of that massive transformation. 2014 alone led to an extra spend of 250 million, and the peak is yet to come. Good. We are facing this massive transformation. We said, okay, then we need to save on other costs as well. We save on indirect cost. We will continue the right sizing of our overhead functions. Thomas told it yesterday as well. He showed the 18%, rounded it to 20, I think. It's good. Let's go for less overhead in our still very big headquarters. We will further improve productivity in improving processes in our day-to-day work with the customer, and in processes or in product introductions with IT support, for example. To be very honest, there's still massive cost reductions possible. Savings will be partly offset by a 1% increase in direct cost. They are basically due to entrance into new markets, extra products we are selling, and if you want extra revenue, you have extra cost as well, but of course with the right margin. The savings behind IP. We've talked a lot about the IP benefits for our customers. For us, there are as well. We expect in customer service and in technical service a saving of 500 million. That is not in the 2 years to come. That is comparing 2013, before IP, and the early 2020s, so when the IP transformation is fully completed. So please take this as a different perspective than we have shown in many of the other charts. 500 million in customer service and technical service, 200 million in the production area, be it the development of costs, be it the IT expenses we have, be it the maintenance, less electricity in the networks, all of that, 700 million over a longer period of time. I've promised you that we will fund our investments through growing EBITDA. How does it work? We see from our plans a stabilization of EBITDA in 2015 to 8.8 billion. Significant increase until 2018 with a CAGR of 1 to 2% per year. Our EBITDA margin will increase from 40 to 42% in 2018. And that healthy EBITDA development allows us to not only fund our own investments, but also contribute to growing cash. On CapEx, we have spent 3.8 billion in 2014, and we will increase by an average of 1% until 2018. This is mostly network rollout. It's vectoring, LTE networks, and the total CapEx for the period of 2015-2018 amounts around 16 billion euro. That is excluding spectrum, and of that, between 55% and 60% is invested into integrated networks. Overall, this leads to a growing cash contribution. In 2014, we achieved 5 billion, and we expect a growth by an average of 2% until the year 2080. Overall, we see stable operating ROCE that is well above our weighted average cost of capital. Drivers, the stabilization of the revenue, the strict cost discipline, the increase of EBITDA, reduction of legacy CapEx, and clearly defined investment rules and hurdle rates. Altogether, that brings me to the midterm ambition. In fixed mobile convergence, as said, 3 million customers, and with the speed we have now, I'm absolutely sure that we will make that. In mobile service revenue, we defend our market share at over 36%. You've seen, however, that our planning has a higher growth than market, so I'm a little bit optimistic that we will not only defend, but even win a little bit in the market. On broadband revenue, a CAGR of 2%, which means that we will keep our market share over 40%, and I remind again, that is a access line market share, not a revenue share. On quality, we continue our successful journey on quality improvement. 1 point per year brings us at 64 points end of 2018. Financially growing EBITDA margin to 42%, growing adjusted EBITDA with a CAGR of 1 to 2%, growing adjusted cash contribution of 2%, and a revenue stabilization in 2016. A lot of promises. I hope I've given you, and the team has given you the confidence of what we promised here in 2012. It was delivered. What we promised you here will also be delivered by 2018 and on the way to 2018. So it's not just a hockey stick which we are promising. We work hard. We put a lot of energy in here, but it's easy to do because we have the success in the market. And I'm proud on my management team. I'm proud of the more than 60,000 employees in Germany, what we have delivered here. We can do it. The promises we have made here, we will deliver. Thank you very much. Looking forward to your questions.
Niek, thank you very much. You left about 30 seconds for the Q&A session, so
sorry for that.
I think we'll speed up on that. I think that's enough for at least one question. We will have Bruno Jakob Feuerborn, our CTIO. We'll have Klaus Werner, our CFO of the German segment, and Michael Hackspiel, who's the Chief Marketing Officer in Germany, to help us with that one single question we may be able to tackle. And we start with Mathieu here on the front row, please. Left-hand side, front row.
Good morning, Mathieu Robillard from Barclays. I had 2 questions, please. First, with regards to your guidance on revenues, obviously quite a conservative guidance because you're not going for revenue growth. But when we compare that to the trends you've seen in Q4, I'm wondering, is there anything negative that you expect in the next few years that could reverse the trend we've seen in Q4 and generally the very strong progress you've made throughout 2014? And as a follow-up on that, for instance, I look at the Magenta targets. If my math are correct, you've had 250,000 households in just 4 months. So if I annualize that for 4 years, it's around 3 million, yet your target is 2 million. So again, why do you think the take-up rate would slow down? Thank you.
Yeah. Mathieu, thank you for the question. On the first one, let's say 2014 was minus 0.8% revenue. We saw the uptake, especially in the last quarters. We made our planning a little bit earlier, of course, already. We saw a lot of handset revenue in the last quarter. That is a little bit the basis for our planning in 2015. We see, however, positive trends, which you're referring to. I'm also a little bit careful now for 2015. The competitive climate is not yet as stable or as calm as we would probably like it. That is true for both mobile and fixed. But honestly, taking everything into consideration, I think, yes, with the current run rate we have, also for the first month, the 2015 planning looks a bit conservative to us as well. I'd rather under-promise and over-deliver, and that is hopefully what will happen for 2015.
I think we continue, let's see, with Justin Fernell here on the right-hand side.
Thanks very much. Yeah, just a couple of questions. This is sort of a dull question. The special factors that you show in the slide towards the back, your cash growth that you've given, the growth profile of total cash. Does that include the special factors or not? Secondly, on roaming, I guess your budgeting process was during the second half of last year, and at that time the roaming regulations looks like it was going to be pretty tough. BEREC seemed to then come out with a decision that perhaps blocks that roaming regulation. Are you considering that your guidance that roaming revenue hits revenues pretty hard in mobile, is that now conservative or not, or is there something else you see coming through on roaming? That's it, thanks.
So I take the special factors question. In the cash contribution shown at page 31, the special factors are not included, so this is before special factors. The numbers shown at 31 it is a approx EBITDA minus capex, so that you see what is going out of the operational side here.
Yeah. And then I think on the second question with respect to roaming, I think you're absolutely spot on. I think, as far as we know, there is no decision yet taken. There is new proposals on the table. So if these proposals would then be executed upon and the things come out better than planned, we're happy to take it. Let's start here and with, I think, Guy Petty on the right-hand side in the back, please.
Yeah, thank you. Thank you. Just a quick question. We've had a lot of focus on the consumer side of the domestic business in the past 24 hours, but I'm intrigued by what's going on in the business segment, especially in the mobile space in Germany, because Vodafone are improving their networks. They're specifically targeting the business segment. O2 continue to talk about targeting the business segment. Can you see what trends you see there, competitive tensions, and what you've got in your business model for sort of growth or no growth in that side of the business? Thank you.
Yeah, what I mentioned already, or tried to mention at least, is that Vodafone is, and I think that I understand that, there's a lot of publicity about the deals they win. And those deals are especially in the DAX 30 segment. I'm not saying it's not an important segment. Vodafone is always proudly saying we serve 90% of the DAX 30 customers. We serve 100%. And that forgotten, they put a lot of focus on there. They have a very strange way, we see that, of calculating prices. We have lost some deals, but we have also won back some deals. Because customers now realize that they want to be with the market leader on fixed and mobile. If I look at the other segments, because the DAX 30 is only this tip of the pyramid, really, and if you look below, we see growth rate of between 3 and 5% in the different segments. And that is where the bulk is. I said the SME are 3.5 million companies. If I have there a growth of 2%, I mean, I can have a little bit less focus on the top, which we don't have. We are present there. We're basically selling to every customer as well. And I can tell you, even on some of the bigger customers where Vodafone is taking the publicity, we serve their 500 top SIM cards, for example, in the bigger companies. And that is a quite common thing. So we are fighting back there for our market share because we want to have those customers as well. I'm sometimes a little bit afraid of the value that is being destroyed in the market, to be very honest. But I think if you look at the overall business development, it's absolutely positive, and we have over average growth there.
No, it's exactly right, Niek, as you said, and probably let's add, we are clear market leader in terms of market share in what we call the V3, the V4 segment. That's the small and medium enterprises. And we are very optimistic that we will keep that in 2015. These are these customers who go for SIM cards with us and who obviously value the network quality. These people do not even think sometimes of leaving because we know we have the best network with the best prices and also sometimes the best handsets, because that's the offer which is also relevant for that kind of customers. Secondly said, last comment on that one, obviously also, as Niek announced, you will see some Magenta 1 offerings very soon for those groups of customers, and we are very optimistic they take the same direction as Magenta 1 has taken for consumers.
Oh, thanks, Michael. We stay on the right-hand side first. Emmett Kelly. And just next to him is Simon Weed, and he'll be then the next one. Just pass it on, man.
Just one question as well. On the fixed line wholesale revenues, again, you're targeting, I think, flat revenues over the next few years. If you just break down the revenues, I guess you've got 3 different buckets there. You've got the legacy DSL, ULL revenues. Then secondly, you've got the contingent model revenues, which should be going up quite nicely. And then you've got other wholesale revenues. Can you just talk about those three different buckets? And again, whether you're being a little bit conservative, given the step up in the contingent model revenues over the next few years? Thanks.
Well, maybe first of all to start, and Klaus can take it on, the wholesale business last year in 2 years ago, 2013, went down 5.5% in revenues. It is down, if I remember correctly, something like 2% last year. So we are already on the way to stabilization, and the contingent model, where you know we're getting from an ARPU level of around about 10.50 towards 20 euros, is well on track to do so. Klaus?
Yes, and we have also shown in the graph at page 19 that you see the new structure. What is the old business with the ULL and the high margin business for us? So we have three trends. In wholesale, we have also the business coming via to systems to us. So we see some slight declines in this business, but it's also slowing down. We see the second one out of the ULL, but we see a tremendous positive one out of the contingent models. And as you have heard, our vectoring rollout is going to happen in the next years, so something like 10% each year in terms of coverage. Also, the contingent model will pay off in these matters. So it comes with the overall network development which we plan.
Simon.
So, yeah, thank you for taking the question, Simon Whedon from Citi. I just have one as well, and that's regarding the IP and process transformation savings. So if I've taken the 700 million you're targeting long term and divided that by the roughly 24 million broadband customers you have on retail and wholesale, and I can see Stefan's ahead of me. So that gives you a savings rate of about just a little bit under €2.50 per broadband customer per month. Does that sound reasonable, a reasonable way to think about it? Should we worry about single play voice customers in the mix? And what do you think the total cash cost, including OPEX and CAPEX, of delivering that is going to be per customer? Thanks.
From our perspective, this is not the right point to look at this. So please do not bring this directly related to the customer, because we will see so a tremendous change in the structure of our customer. They will brought to higher service qualities. We will bring them to entertain. We will do the Magenta 1 stuff and so on. So you cannot compare the saving to a access line or to a customer today with a customer which will have in the year 2018. So please take it from an overall perspective, what we want to save in these categories, and we want to save these categories not only in terms of the results in cash flow, but also for the customers. We want to give them better services, the e-company perspective, and so on. And the financial perspective is one element. It is important for us, but please do not calculate it on a household or access basis. This is, from our perspective, the wrong basis, and look on it.
Thanks, Klaus. Maybe moving on to the left-hand side. Over here on the left-hand side, Steve Malcolm.
Thanks. It's Steve Malcolm. I'll ask a couple as well if I can. Thanks. First of all, just on the partnership revenues you mentioned, 300 million euros. Can you add a little colour on how those agreements work? I know you won't give us sort of precise commercial details, but do you have wholesale revenue shares with the likes of Netflix and Spotify baked into your forecasts? And then on the housing associations comment you made, can you sort of add a bit of colour on how that negotiation process works? Because I understand that these guys are locked in sort of 10, 30-year contracts. How do you break that? How do you get into them? How do you sort of get from 280 to 780 over the next 4 years? Thank you.
Okay. Yeah, on partnerships? Okay, fine.
I can take the partnership one, and Michael takes the next one. So today we have a big portion of our revenues in partnership is coming out of security services. So for example, with Norton. They are the ones coming out of streaming, and Netflix, they are really at the beginning, but we see a huge potential till the year 2018. And what we as well see in this category, it is our smart home revenue, which we actually just start to bring it up and running. And we see a huge potential till the year 2018. So bringing all these pieces together, then the 300 million are well calculated with our projects we drive.
On housing associations, as you said, we are obviously always targeting those housing associations which are available in that year. So for 2015, we're going to look on smaller ones, which sometimes is only 1,000, 2,000 flats. But once you are in, you got the ability on every next bucket, which becomes free, to attack. Like on Deutsche Ennington, you know, we got that deal. We started and provided the first households now, and now we're discussing with them for more and more flats which get free.
Well, thanks, Michael. I think there's time for one last question with gentleman here over on the left-hand side, just in front of Steve Malcolm. Thank you.
From Société Générale. It's one question, and it's direct on Comstar. You basically, the previous speakers and yourself has basically put the emphasis on segment the market and avoiding cannibalization across the different offering. Now, the market in Germany has been very segmented. You have a premium offer, you've got a value offer. Now, your premium offer, you highlighted, it's very defensible, very good network, very good quality. Comstar, last time I checked, is basically a value offer, low speed, relatively low speed, and relatively low price. Since last year, because now we have got remedies from the EU, there are MVNO that can attack the market, I'm talking about real share, with an offering that actually priced less than Comstar with a higher speed. Now, you highlight that Comstar was a good success last year. Is that revenue growth you pocketed in future years? And to defend the Comstar position, are you going to increase speed or you just rely on branding? And if you're going to increase speed, how you can manage cannibalization across your brands? Thanks.
As you exactly said, we monitored in 2014 what's the right offering for smart shoppers. And Comstar, in our opinion, fully met that point because it was a mixture of new features. Yeah, let's not forget, Comstar is also doing something you will hear in some minutes about what an Un-carrier does. Because they have other models, for example, how to have your handset, yeah, and these kind of things. So it's always a mixture of what you said. The right price point, and it's not discount, it's smart shopper. The right offer in terms also of flexibility, and then the right ingredients, which is amount of data and speed. And we will do the same strategy in 2015, monitor exactly where the competitors move in that area. Yeah, which is a one-and-one, which also is now an Otello. You know they are copying our multi-brand strategy a little bit, and we will find the right offer for Comstar at the right point in time.
Well, thanks, guys. Thank you very much. I think we'll have to leave it there. There's a conclusive Q&A session with Tim and Thomas when we're after, where I think we can tackle a bit on Germany as well, if you may. But my biggest task is actually today to bring you safely on time to your flights. So therefore, thank you very much, gentlemen. See you later on.